Good morning, everyone. This is Todd Brow with Senior Insurance Marketing, and we are excited to have Julie Sherman with us from United Life. And Julie is going to talk to us about their whole life product. It's a great competitive product, and we're just so excited to have Julie on board with us today with our webinar. So without further ado, Julie, take it away. Just one other thing I wanted to mention: if you do have any questions, I'm going to be muting everyone, so just put it, type it in the Q&A box. So without further ado, Julie, take it away.
Great. Thank you, Todd, and thanks everyone for giving me the opportunity to talk to you a little bit about our product at United Life. I thought today I would give a brief little demo on some tips and ways you can use our single premium whole life. And I'm going to show you how you can use this resourceful planning and also give your clients a permission slip to spend. So we'll just go on to the next slide. And this is just a basic general disclaimer, nothing you haven't seen before, so we can move on to the next one. Basically, what I'm going to talk about is today we're going to talk about that people have lazy money. And you're probably thinking, what in the world is lazy money? Well, that's basically money that's set aside that people aren't using it for, day-to-day needs. They've set it aside for in a savings or in a CD that they don't need to spend. But unfortunately, it's probably not earning much interest, so it's just idle funds sitting there with low interest-bearing accounts. It could be set aside for final expenses. It could be money that they want to save for the kids to give them someday. And we can move on. So let's show you a way we can put that lazy money to work. And I'm going to show you a way you can accomplish multiple goals in a tax-efficient manner. One of the things we can do is you can take some of that lazy money and you can fund a single premium whole life policy, and that's a guaranteed paid up policy. It can be used to cover those final expenses, or it can be used to pass on to your loved ones tax-free. Now, when you buy a paid-up whole life policy, this is a policy that is one and done. You can throw it in the drawer and forget about it. You never have to worry about it again, never have to worry about putting another penny into it. So that's a good thing about it. But I'm also going to show you how you can take any of that leftover money and use it as a permission slip for your clients to spend the difference. Next. And I'm going to use a hypothetical example here. This is Marvelous Marla. So Marla is age 70. She's in good health. She has 2 grown children and 4 grandkids. And she told me that she has $10,000 set aside for final expenses. She's talked with a funeral home, and they've explained to her how much it's going to cost, and her kids know that she's got this in her checking account or savings account. And so she said, I need $10,000 when I die. So we can go on to the next slide. So I take that money, or I say, okay, let's take that $10,000. I'm going to give you what you need, a $10,000 policy, but you're going to see that it's only going to cost you $6,838 to do that. Now, what I've done is I've taken that money, put it into a guaranteed policy where, again, she'll never have to put another penny into it. She can take that policy, throw it in the drawer, forget about it. The kids just need to know where it is. She can assign those funds to the funeral home. It's done. But what I've done next then, and you can go to the next slide, is I've given her a permission slip to spend the difference. So if you saw in that slide before, it only cost a little over $6,000, so that gave her $3,162 left to spend. Now she could take that money and she could put it towards a Disney vacation with her family on spring break. And now I'm the hero because I've given her what she needed, but I'm also giving her an opportunity to take some of that extra funds and use it for something she really wants to enjoy. And we can go on to the next slide. So one of the things that we need to remember, there are some factors that you need to consider when you're taking some of that lazy money. First of all, single premium whole life rates do vary by gender, age, and the benefit amount and the health risk. So it's not for everybody. But if you have somebody that's in their 70s, 80s, because we will write this up to age 90 even, and they have lazy money, they have money that they're not going to need for any reason, and they've just got it sitting there, you're really doing your client a disservice if you don't talk to them about this policy and what it can do for you. So really it's their never, never money that you're taking and just repurposing it. Next slide. So I've got some big news to share, and many of you know this already, but we are single premium whole life policies and as well as our other traditional policies um, have a simplified underwriting or non-med limit of up to 100,000. What we've done effective March 1st is we've raised that limit on our single premium whole life policy to 300,000. Now that's for all select, standard, and substandard through Table 4 policies. That means there's no medical testing, there's no blood, urine, anything, no APS. And there can be a quick underwriting decision, usually within a couple of days. So basically what that means is you just fill out the app. You have your client fill out the app. There's 20 questions in total. The first 7 are knockout questions, so you know that if you can't get through the first 7 that it's not even going to work, so there's no going back with the underwriter. But then you fill out the rest of the app, you submit it. Usually within a couple days they'll have a decision made for you. The only thing the underwriter may ask based on how you answer the questions, let's say you have high blood pressure, your client has high blood pressure. They may ask for a questionnaire filled out. But that's really it. I mean, just the questionnaire would be the only other thing they could ask. So it is regular underwriting and medical testing required for cases above 300,000. But again, as I mentioned, we can write this up to age 90. The max will go between 86 and 90 is 100,000 for those cases. All right, so we can move on to the next slide. So Marvelous Marla came back to me after her spring trip and just was so impressed with the fact that I was able to repurpose that money and she was able to use some of that money that she came back and says, you know, I've got a $75,000 CD coming due. What can I do with that? I mean, maybe we could take some of that and do something with it. So I show her this, take the $75,000, and that purchases her, based on her health and age, $122,766. Now, what that policy also provided her with free benefits that she did not pay for, which is our living benefit rider and our return of premium rider. Now, the first thing I'm going to draw your attention to is that second arrow down in the middle. That, well, if you look at the end of year 2, at start of year 3, there's that $75,000 back that she put in 2 years ago. So basically what I'm saying is if she decides in 2 years that she has made the worst possible decision ever by doing this, she can walk away with all her money. But the reason why I don't think she'll do that is because not only am I able to do that, provide her money back sooner than possible, but because the whole idea of life insurance is whenever it has to be life insurance as long as there's a tax corridor in there, I'm bumping up her insurance during those few years that the cash value is back, so that if you look in year 3, she's got $75,000 in cash value, true, that she could walk away with. But look at the death benefit. Now it's up to $138,000. So if she were to die within those few years when the cash value is elevated, her beneficiaries are going to get a bigger death benefit than she had actually applied for. Now, eventually, she's going to start, that cash value is going to start earning interest, and it's going to go back down. The face amount is going to go down to what she had originally applied for. But she's still going to have that guaranteed death benefit of $122,000. And you can see that her cash value is still growing. She's still providing that tax-free death benefit to her kids in the event of her death. So basically, what I've provided is I've taken her money and put it into a tax-free death benefit to be paid out to her kids now. I've also provided for her the opportunity that if she decides this was a bad decision, after 2 years she can take all the money that she put into it and walk away, or she can stay and continue to earn the benefits of this policy. The other rider that I didn't mention is the living benefits rider. And if we go on to the next page, I'll talk a little bit about that. Here's the other rider that I said was automatically included on all ages, and that's on policies 25,000 and higher. And basically what that is, it's going to provide Marla an opportunity to access these funds if she needs to go into a nursing home, if she becomes terminally ill, chronically ill. So there's a different discount factor involved, but basically what it's saying is if she goes into a nursing home, she can accelerate up to 90% of that death benefit, and then we would just take a discount factor of 8% on that, and that's the amount of money that we would pay out as a lump sum to her. Again, that's money that she can have to access if she needs it. And again, there's no cost for the rider. There's only a cost if she decides that she needs to utilize it. Again, that rider is available on face amounts $25,000 or higher, and that return of premium rider is available on face amounts $25,000 or higher, and only on issue ages 41 to 90. And we'll go on to the next page. So some of the other guaranteed products that we have available, if your client doesn't have a lump sum to put in, we still have the traditional whole life, and we'll issue that up to age 85. And we've got the 5-pay, the 10-pay, and the 20-pay with the issue ages there. Now these have a non-med limit only of up to $100,000. We only increased the single premium whole life up to $300,000. Now, one of the things I wanted to bring to your attention is in the months of April and May, United Life is going to offer double incentive points on all single premium whole life apps that you submit with cash or 1035 exchange during the months of April and May. So whatever you submit, you're going to earn double trip qualifications for. And again, just promoting the fact that we'll go up to $300,000 on that death benefit without additional underwriting. So it's going to be all non-med limits. And you can go on to the next slide. All right, so basically now I'm at the point where if you guys have any questions, I just want to plug the service here at United Life. We don't have any automated systems, and we try to have prompt and courteous service with straightforward answers and guarantees and products, and very highly capitalized with a company with no debt. And then the next slide, I think, is just going to open up for any questions. So if you've had any opportunity to send any of those to Todd, I am happy to answer those at this time.
Right now I don't see any questions in the Q&A box, but if you do have some, feel free to type them in there, and Julie will be able to help answer those questions for us. But again, the double points for April and May, that's huge. And also United Life, very, very friendly customer service, all the way from the people that answer the phones, the underwriters, and everyone. So it's a great company, and if you have a client that you're looking to get a quote for, feel free to give us a call here at Senior Insurance Marketing at 877-800-3080. We'll be happy to help you out with getting the quote for a client that you're working with. So, Julie, I don't see any questions we have here. So, Julie, I really appreciate you showing us the United Life products, the single premium whole life, and then also mentioning the other products as well, the traditional whole life and the 5-pay and so on. So, but feel free to give us a call here at Senior Insurance Marketing, 877-800-3080, and we'll be happy to help you out because we want to help you grow your business. Take care, everyone. Thanks, Julie.
Thank you.